Hey, what's up, everybody? Crypto in the house. It is Thursday. It is September 29th. I'm going to talk a lot about NFTs today. We're going to talk about some volumes going on in different exchanges. We're seeing a lot of money being spent. Well, particularly one NFT. We're going to touch a little bit on housing rates. I mean, these mortgage rates are insane. Craziest volatility in 3 decades. So I'm going to jump right in. First, got a CryptoPunk number 2924, bought for over 4 million US dollars, 3,300 ETH. So just to show you, people still are spending money. People still are burning, through ETH with gas fees and things like that. Not all is, lost, the merge, blah, blah, blah. People are still on the NFTs and not afraid of using Ether. So for what it's worth, I just wanted to show you that. Moving into Coinbase. Here's the volume, right? We're going to look at retail institutional, okay, from Q2 of 2020 through Q2 of this year. This is from Cointelegraph and obviously Coinbase data. But you can see the totals at the bottom when they take the retail and the institution by billions, okay, each quarter, and how it peaked really, 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 really high from Q1 of last year through basically somewhat Q1 of this year, and it's kind of slowly starting to go down. We'll see where that goes. Obviously, Binance is the big dog. FTX is sort of jumping on the heels too. I mean, they're obviously huge here. Coinbase, we'll see what happens. Not a ton going on there in terms of what you would expect, but they have to be a little nervous seeing these numbers start to decline since Q4 of last year in a pretty significant way. In billions, that's obviously more than half it went down. So anyway, something I thought was cool, worth sharing. Good chart by Cointelegraph. Decrypt put this article out, Warner Music. So they launched a partnership with OpenSea. It's going to be the first IP generative NFT label pass. Basically, we'll give artists early access. Well, we'll give the Warner Music artists early access to new OpenSea products, improved discoverability on the marketplace, dedicated and featured portions of the OpenSea site for upcoming NFT products. Our artists will also receive specialized support from OpenSea team members to aid both in the expansion of their Web3 fan bases and the onboarding of existing fan communities into the NFT space. So if you're a big fan of NFTs and you also like specific Warner Music artists, obviously this is very cool for you, and just very cool to see the music space open more up to, no pun intended, more open to OpenSea and other platforms, NFT platform marketplaces. It's more NFTs, I warned you. Meta, they talked about this earlier this year, but I'm sharing the update when they said they were going to introduce digital collectibles on things like Polygon. And right today, we're announcing everyone on Facebook and Instagram in the US can now connect their wallets to share their digital collectibles, right? So this includes the ability for people to post digital collectibles that they own across both Facebook and Instagram, obviously both owned by Meta. Additionally, everyone in 100 countries where digital collectibles are available on Instagram can now access this feature. So again, if you're a Meta user and you like NFTs and want to share them, there you go. Very cool news. It's finally come to more, fruition from the first announcement earlier this year. More funding. Cardano, basically their entity, the founding entity, Emergo, to invest over $200 million to boost the ecosystem. Basically, the Cardano protocol, it's basically a founding entity to develop products, services, applications meant to support the growth of Cardano. The funds will be provided to projects directly building atop Cardano and to projects from other networks that build products to integrate into Cardano's network alongside their own. So the 100 million earmarked for investments in Africa. We all know Charles was out there in Africa a lot last year. Basically, they're saying that that's a huge, obviously half of this fund, right? Key growth driver in the region, Africa, huge population growth planned projected in Africa over the next decade or two. So they're trying to push, obviously, crypto and Cardano. Moving across, north of Africa, we're into the UK. NASDAQ put this out, obviously. The pound is taking a beating, but we're seeing a lot of Britons flock to crypto, specifically Bitcoin. So they're saying that Bitcoin sterling volume spiked to record highs as a British currency flounders. We saw all these wacky things that the UK financial sector is doing, trying to beat this inflation. Obviously, there's a huge energy crisis. there's gas, everything. It's going to be a very rough winter in the UK and through much of Europe, which is awful. The volume of transactions in the Bitcoin sterling trading pair across the 8 major exchanges spiked to a record high of 846 million pounds, which is 920 million US, compared with the average of about 54.1 million pounds a day so far this year, right? So that's obviously a huge surge, right? Was due likely to traders swapping sterling for Bitcoin, according to CoinShares. So if we're seeing saying Bitcoin is a safe haven, we're seeing a lot of Britons potentially agree with that. Moving into real estate, not great news, but home buyers grappling with the most volatile mortgage rates in 30 plus years. Okay, so they're saying we've seen 6, went down to 5, above 6 last 3 months. Okay, we've seen close to 7, 6.52 was one of the highs yesterday for the 30-year fix, causing headaches. It's like, typical house hunter starting their search in July, closing in September. Okay, let's just say you took maybe you had a contingency where you had to sell your house before you moved in, hence why you were, maybe 30, 45 days, whatever, 60 days. They saw their potential mortgage rate fluctuate by a 0.5 percentage point every 4 weeks. Okay, that's the most volatile 3-month period since '87, when mortgage rates were, surging to a record high of nearly 19%, while inflation was, in the mix. Here's the chart of that. So you can see basically 1987, the 0.48 points, right? 3 months ending 12/4/87 to the points 3 months ending 9/22. Okay. So we're seeing that 3-month rolling average. It's from Redfin analysis of the Freddie Mac primary mortgage market survey data. I'm going to leave you with this last tweet here. Charlie Bilello, who's a great follow, puts it in perspective. 2 years ago, 30-year mortgage rate 2.88. Your average home was about $405,000. Today, 30-year mortgage rate 6.7. Average new home price $522K. The result, that $23,000 increase in your down payment, assuming you're putting 20% down, so you have to kick in another 23 grand, and 100% increase in your monthly payment, which went, again, national average, $1,345 to $2,694. Now, obviously, with buying power, inflation, what you bought, it's crazy to say, but 2 years ago, what you could buy for this, a gallon of gas, whatever it might be, it's not what it costs now. People think, oh, I got a raise. Well, did you get a 14, 15% raise? If not, you're losing money. Even these savings accounts we're seeing, I've seen as high as 3% go on right now. But again, it's not going to make a dent in the inflation, what's sucking it away. However, if you want to look at it like, hey, it's still somewhat affordable when you're looking at those 1987 rates. And we're obviously things were crazy double digits, and we hope we don't get there. But I'm sure the Fed wants to try to get it back to that 2%. We'll see. But I wanted to leave you with that. Like this video if you find this of value. I do crypto and I do real estate, the most important stories I feel for you to share and myself to learn in a condensed time, so you don't have to spend time looking at the web. So consider subscribing to this channel if you like this. I do live streams every day. I'm on all the other major social platforms. So have a great rest of your day. I'll see you all Friday, and hit me up in the comments. Let me know what you think. Take care, everybody.